Hey everybody, welcome to Mortgage Today for Thursday, November 7th, 2024. And what a day it was. What a nice opening. UMBS opened up 31 basis points on the day. S&P futures were up 12 points. Bonds were remarkably calm overnight given the volatility that's dominated the average overnight session recently. Bonds were modestly stronger ahead of jobless claims data, although the we've improved a bit since then in the early trading. Jobless claims came in at 221,000 out of 221 forecast. They actually got one right. 218,000 previously. Continuing claims came in at 1.892 million versus 1.88 million. It was 1.853 million previously. The Fed Fund futures were pretty much a lock for a 25 basis point cut, which we got. Pricing pressure should continue as the vacancy rate ticked up to 6.8%. This is the highest level since the pandemic. We have lost a lot of multifamily construction. And we have a lot of multifamily construction still in the pipeline. The Fed lowered the Fed funds rate by 25 basis points today. Fed says labor market conditions have generally eased as opposed to saying job gains have slowed previously. The Fed drops the phrase about gaining greater confidence that inflation is moving towards 2% and instead just says the risks of achieving the goal are roughly in balance. This could be taken two ways. Fed now says in support of goals instead of in light of progress towards goals. The last bullet suggests the Fed is happy with where things are at and would just like to keep it that way. As intraday charts give way to daily charts in the coming weeks, it will be all too easy to look back on today's calendar and conclude that it would only have been the Fed announcement that was capable of motivating a 10 basis point rally in Treasuries and a half-point gain in MBS as we hear in the past, no, that rally was largely already in place ahead of the Fed announcement. We can't chalk it up to the continued claim number, though that may have helped. The simplest theory is that there are dip buyers in bonds now and that the election is over. That's not a bad one, but we could just easily say that it's a glacial drift towards higher rates, got ahead of itself yesterday and fell back in line with the trend today. Either way, MBS and mortgage rates have outperformed the move in Treasuries, and there's at least a moment of hope for optimists to imagine an inflection point. UMBS closed the day up 57 much-needed basis points, landing at 99.58. We can finally see it approaching back to that 25-day moving average line, so we're actually approaching back at it. But this level right here at 99.75 is a trend line that has been kind of a ceiling since late October. Broke through the floor in late October and then just really hasn't broken back above it. So hopefully we can get some bad news or something tomorrow in order to keep that trend moving and get back above that 25-day moving average.